Hi and welcome to the week ahead video with me, David Madden. Before we take a look at the major events of next week, let's just recap on some of the big events of the week just gone. The US economy continues to rebound. We saw strong US ADP employment numbers during the week. The reading came in much higher than expectations. In addition to that, the US initial jobless claims report fell to its lowest level since the pandemic struck. So this really added weight to the argument the US economy is improving, and that lifted sentiment, hence why we saw a continuation in the rally in US stocks. This here is the US30. It continued its rebound. It hit its highest level since early June, so that really underlines how well the market's performing. If we continue to press on higher from here, we could hit the target 34,743. And a break above that could see a target 34,838. If we do drift lower, support could be found from these simple moving averages, and you'd only really begin to question the recent upward trend should we break below this area here at 4,122. It's not just the US 30 that had quite a positive run yesterday. We also saw a strong run. Excuse me. We also saw a strong run on the US 500. The US 500 managed to close above 4,300 last night for the first time ever, so it yet again set another record high, and this really shows you how bullish the market has been recently. If we press on higher from here, we could be looking at targeting 4,330. If we do see any moves to the downside, support could be found from this area here around 4,295 or perhaps at 4,278. It wasn't just US stocks that performed well on the rebound story. We also saw a broad rally in the US dollar. The US dollar index hit its highest level in almost 3 months, and this was really reflected in the kind of turn in the move to the downside that we saw in the British pound. You can see here that GBPUSD fell to its lowest level since April. This was partially because of the stronger US dollar, but it's also partially because Andrew Bailey, the governor of the Bank of England, yesterday reiterated the view that any rise in inflation in the UK is only going to be temporary. Inflation in the UK is 2.1%, its highest level since late 2019. There's fears it could continue to rise further from here. But Mr. Bailey said those echoed the Fed's update and said it's only going to be temporary. This suggests that even though inflation is higher, the Bank of England won't look to tighten monetary policy anytime soon, hence the weakness in the British pound. If we do see further declines in the British pound against the dollar, we could see a target 1.3716. Any rebound in the pound could encounter resistance on this simple moving average here. Notice how on a few occasions in the last few sessions it did act as resistance, and if we do manage to retake the simple moving average, this area here in at 1.3938 could act as a resistance point. In relation to the US dollar, we also have some big updates coming out during the week. One of the big events of the week is going to be the minutes from the latest Federal Reserve meeting. The meeting last month, where it was signaled there's going to be potentially 2 interest rate hikes in 2023. This was a big change from the March update, which didn't signal any rate hikes in 2023. Now, since then, we have heard Jerome Powell, the head of the Federal Reserve, stress that it's very, very unlikely that the US is going to encounter 1970s style inflation, whereby inflation in the US back then was over 10%. Inflation in the US is currently 5%, and Mr. Powell and other US central bankers have been very keen to reiterate the point that any rise in prices is only going to be transitionary or temporary. So with that, it signals that even though they're not looking to hike rates or alter policy in the near term, it looks like the Federal Reserve have already laid the groundwork for rates being lifted in the next 12 to 18 to 24 months. And I mentioned a moment ago how we've seen a broad increase in the US dollar. That's also reflected here on the Australian dollar versus the US dollar. We can see the Aussie dollar has been moving lower recently. In fact, we've very recently fell back to a level last seen in December 2020. If we continue to move lower from here, we could see a target zero. We could find support at 0.7377. The Aussie dollar is going to be of particular interest this week because the Reserve Bank of Australia have their interest rate decision on Tuesday. It's highly likely that the central bank will keep policy unchanged, but given that Australia, and along with other countries, are also sadly grappling with the rise in COVID-19 cases, the Delta variant is proven to be a problem for many governments. It's likely the Reserve Bank of Australia will not be kind of signalling any sign of monetary tightening in the near term, so we could see further ground to be lost on the Australian dollar. It's also worth noting that on Friday we have the jobs update from Canada, so that's also going to be important in terms of how the Canadian economy is recovering. That's all from this video. Thank you very much.